I think people have a recency bias where they assume the precious metals have to move opposite of the equity markets. And yet, go back to the first decade of this century, 2001 to 2011, you had a bull market in stocks during a good part of that, and you had a very big bull market in precious metals. So there are times when they move together, and I certainly think this is one of those times. They look very strong. Gold obviously has moved to all-time highs, so there's no resistance above it. Silver's got a lot of resistance to move through, but I think it's a very thin area that once institutions decide that they need some of that, because the momentum is there, you will see that the prices can move dramatically in pretty quick fashion.
DavidHunter, chief macro strategist of Contrarian Macro Investors, exudes optimism regarding the prospects of gold and silver, setting conservative pre-bust targets of $3,000 for gold and $60 for silver. He envisions silver potentially surging to $75 should it surpass the $60 mark, with significant upside potential anticipated for gold and silver miners. The recent rally in gold prices, surpassing the $2,300 milestone, was fueled by the Federal Reserve's decision to maintain unchanged interest rates while announcing a reduction in the pace of balance sheet reduction. Furthermore, Fed Chair Jerome Powell's failure to provide clear guidance on future rate cuts added to the bullish sentiment. Hunter emphasizes that gold has breached all-time highs from a technical standpoint, while silver encounters resistance but remains poised for substantial gains as institutional investors join the momentum. As of Thursday, the price of silver opened at $26.09 per ounce, marking a modest decrease of 1.16% from the previous day, but reflecting a notable 9.05% increase since the beginning of the year. Regarding driving factors for the metals, Hunter anticipates a decline in interest rates and foresees a weakening U.S. dollar, setting a target of 80. The Federal Reserve reiterated its stance on maintaining unchanged interest rates, citing a lack of further progress in curbing inflation. This decision maintains the critical rate at its highest level in over 2 decades, from 5.25% to 5.5% since last July. During a press conference, Powell indicated that a rate hike was unlikely, reiterating the Fed's desire for greater confidence in inflation easing before considering rate cuts. Hunter's bullish outlook on precious metals aligns with prevailing market sentiments as investors monitor economic indicators and Fed policies for potential impacts on gold and silver prices. Come along as we explore DavidHunter's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Yeah, I've been a huge gold and silver bull here, and I think it's just beginning. So gold, my target on gold has been for quite some time, 3,000. And I think that's a conservative estimate of where it goes pre-bust. So my targets, when I put out a target, I'm saying pre-bust. So, I think gold can go to 20,000 by the end of the decade for reasons we can go into when we talk about the bust. But pre-bust, I think gold can go to 3,000. Silver, I have a target of 60. And I've been saying of late that I think if it gets through 60, you could see 75 very quickly. So 60 to 75 is kind of where I see silver going this year. So those are big moves. And the miners, which have lagged, and they've had to move out of their bottoms of a few months ago, but they've lagged. I think they have huge upside from here. It's interesting because I think people have a recency bias where they assume that the precious metals have to move opposite of the the equity markets. And yet, go back to the first decade of this century, 2001 to 2011, you had a bull market in stocks during a good part of that. And you had a very big bull market in precious metals. So there are times when they move together. And I certainly think this is one of those times. Technically, they look very strong. Gold obviously has moved to all-time highs, so there's no resistance above it. Silver's got a lot of resistance to move through, but I think it's a very thin area that once institutions decide that they need some of that, because the momentum is there, you will see that the prices can move dramatically in pretty quick fashion.
Sure.
In terms of the metals, I think rates coming down And probably the biggest part of it that has not manifested yet, but I think will, is the dollar coming down. I have a dollar target of
Right.
80. So
80. Okay.
so if the dollar's at 106 and I have a target of 80, imagine what that does to metals if I'm anywhere near correct. I think what it's going to be, not so much hawkish, but I think, and again, this is a contrarian call, but I think we're going to find that the Fed's going to have to scramble and reverse themselves here. And I think the others are going to be slower to do it. So ECB and Bank of Japan obviously is going to be going the other way. They've got issues here that I think are going to come to the forefront here very quickly, where their currency is going down. I mean, their currency is going down. Their rates are about to break out, and they've got a very leveraged balance sheet. So I think, but when I look at the currencies and see what's going on, it strikes me there's a potential here for some sort of an accord. Plaza Accord of 1985. I'm not sure it'll be that, but something where they coordinate the valuations of the currencies, particularly the yen versus the dollar, because Japan can't withstand much more pressure.
Hunter has revised its targets for various stock market indices, setting a target of 7,000 for the S&P, 23,000 for the NASDAQ, 55,000 for the Dow, and 3,300 for the Russell. It anticipates a historic upward run in the market, encompassing both small and large caps, growth, and value stocks. On Thursday, U.S. stocks made gains as investors shifted focus from rate worries to Apple earnings and the upcoming monthly jobs report. The S&P 500 rose roughly 0.5%, with the Dow Jones Industrial Average gaining 0.5%. The NASDAQ Composite led the gains, up 0.9%. Hunter expects the Federal Reserve to maintain a cautious approach, balancing concerns about inflation with the risk of tipping the economy into recession. The impact of higher interest rates extends to the public through increased costs of mortgages, car loans, business loans, and other debts. The Fed's decisions are closely monitored globally, with many central banks, including the Bank of England, also facing heightened rates. Powell noted that policymakers in other countries may move faster than the U.S. to cut rates due to concerns about economic slowdown. Let's get back to the interview.
I've dropped the 6,000 part of that range, and back in January, and I raised my target to, or had my target moved to 7,000. So I don't think I need that range anymore. I think my work shows that we are going to see the upper end of that range. So I have a target of 7,000 for the S&P. 23,000 for the NASDAQ, 55,000 for the Dow, and the hardest one for people to believe probably is that my target on the Russell, which had been 3,000, I've raised that to 3,300. So I think you're going to see this market, once we come out of this small pause we've had for the last month, resume its upside, get actually steeper, and a run to the top from here will be broad, include small caps and large caps, include growth and value. I think it's going to be a historic run, let's put it that way. Yeah, I like to say markets stair step their way to a top. So you have to have these pauses along the way to rebuild the skepticism. Otherwise, markets get ahead of themselves, get overbought. So really, this market, it's been probably 4 or 6 weeks of sideways to down, more recently down movement. It's all within an uptrend. I don't see anything here that causes me concern. And actually, what I see is that wall of worry that helped carry us from 3,500 on the S&P back in October of 2022 all the way up to 5,250. The move down here to just a small move of maybe 6%, a little more, has rebuilt that wall of worry, and that's the fuel that fuels the upside. If you have skepticism, you have pent up demand. I think the odds are it's possible we could get down to 4,800. I think that's unlikely, which isn't all that far from where we bottomed out last week. I think more likely that low of last week holds. Today, who knows? You get volatility out of Fed meetings, so who knows what today brings? Could go down to 5,000 or may not. But I think this is the end of that consolidation. And within hours or days, I think we resume the upside. So I don't look for a lot of downside here. If we do happen to break the lows of last week, like I said, at 4,700 is, I think, the 200-day moving average that could come into play. I'm not expecting that. I think when I look at the internals and look at the nervousness out there, I think more likely we're going into this meeting very skeptical. People are nervous and getting more nervous that Fed hikes are done, and the Fed's got to worry about inflation coming back the other way, breaking out again. So I think people are going into this with pretty big amount of skepticism about a bull market, and that to me is going to temper any downside. And I think Powell, my guess is that Powell's going to not come out all that hawkish. He'll continue to say higher for longer, I would guess. But I think they're going to have to temper that with the idea that there are signs, certainly saw it this morning in some of the numbers, and recently, there are signs that the consumer is slowing down, that the economy is slowing down. So we had that kind of strength in the first quarter, but obviously the GDP number recently was unexpectedly low, and numbers in the ISM numbers and Chicago purchasing managers yesterday, all those things are coming out, indicating we're in a slowdown. This economy is getting weaker, so the Fed has to look at both the economy and inflation. I don't think they can get much more hawkish here. I think they have to worry that they are going to tip this thing into a recession if they're not careful.
Gold bulls drove up the price following the Federal Reserve's decision to keep interest rates unchanged and to reduce the pace of its U.S. Treasury holdings, marking a mildly dovish stance as it reverses quantitative tightening. Given the Federal Reserve's recent policy decisions and the broader economic landscape, how do you anticipate the dynamics of gold and silver prices evolving shortly? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.